In the Dow Jones Industrials today, 569 points ago. We're still waiting to hear from Elon Musk. You will be hearing from a lot of market analysts shortly on the comeback that was to the right of your screen. So if there is a way to time these sort of metaphors, this was it. Welcome, everybody. I'm Neil Cavuto, and you're watching Your World, where stocks came back. And 50 years after we used that space platform to really get going on our lunar program, and remember, it was from that same platform that we launched these gigantic Saturn V rockets, which were the thrust behind the Apollos that would take us all the way to a lunar landing. Indications today that we are firing away on all cylinders again, maybe in space, and maybe reusable space rockets as well. And we are once again firing at the corner of Wall and Broad. Now, one day does not a guarantee make that things are back to normal or that the Wall Street bull market rocket has returned, but I had a lot of people breathing a sigh of relief nevertheless. Lauren Civinetti outside the New York Stock Exchange on what was behind the sudden comeback today. It started out very differently, Lauren.
I know. This is a day where I think the traders in the building behind me are just happy to walk out and be done with it. We had an 11-point range from top to bottom of the market today. If you add that to the near 1,200-point sell-off that we had yesterday, down 666 points on Friday, a few other rough days last week, we're talking a market that's given up about 2,300 Dow points, and then bam, right in the final hour of trading today gains a lot of that back, closing sharply higher as we wait for these final numbers to peter out here. The Nasdaq and the S&P 500 also closing up nearly 2%. So yes, call this a turnaround Tuesday indeed. We have seen so much volatility come back. It almost feels like out of nowhere into the market. You have the VIX surging yesterday, the most ever, rising sharply again today as investors fear and bet that higher interest rates are needed to combat inflation. So a lot of traders who actually bet that the VIX index, that fear would remain low and the market would remain calm, they got burned here. But the question is, I mean, should investors in the markets be calm at this point? What is the state of the U.S. economy? It's looking pretty good at last check. If you take a look at the latest GDP numbers, we're talking 2.6% growth. That is likely to be revised higher. We've seen previous quarters of 3%. Wage growth of near 3%, best in 8 years. And of course, corporate earnings very strong. So the state of the economy is doing well. This is something that the Treasury Secretary Steven Mnuchin commented on earlier today, basically saying the economy is, quote, fundamentally strong. The markets are functioning well, and he believes, and the administration believes, that the long-term policies of the White House will be a positive for the economy. So right now we are grappling with the idea as investors of how to react to the new normal environment, perhaps, that we're in, where volatility has made a comeback, and the idea that you can have a market that pulls back, comes in a little bit, if not corrects itself when the economy, Neil, is still strong.
All right, we shall watch it very closely. Lauren Civinetti outside the New York Stock Exchange here. We should posit here that it was a whipsawing day, as she pointed out, a better than 1,100-point swing that only went substantially higher in the last hour of trading. You don't want to bemoan that. You don't want to sort of poo-poo that. It was, and ultimately got to be what it was. But again, with the gain today, the 2 1/3% gain, we have now retraced about 1/3 of the ground lost over the last few days. So not quite there. For a while, we were down in excess of 10% from our highs today, the second time we revisited that in as many days here. So a technical correction of 10% is not really official until you do so on a close, and we didn't do that today. So again, just a reminder that for those who want to see some closure on this sort of thing and see it convincing, they're not convinced we had our 10% correction without a closing of that. We did not. Again, Market Pros, Charles Payne, the host of Making Money, market strategist Alan Nuckman, and Kimberly Foss. Kimberly, to you, is this real or was yesterday real?
I think they're both real, Neil. The bottom line is we have a new normal in that there's high frequency trading, and these algorithms don't have a heart and soul like a human being does. So what happens is these are programmed to do exactly what they're programmed to do. And when the markets go down, they need to rebound. So they're going to go in and sell. So the fact of the matter, we went so far down so fast and coming back today, that doesn't surprise me in that this is what the new normal is. And investors just have to get used to that. We're long term. This is a bull market pullback, if you will. I think we've got a long way to go in the future. So I'm not concerned. I was buying yesterday, and I was telling my clients to buy yesterday as well.
What about you, Charles? Was this the rally that we needed, or was this just a head fake?
Well, let's put it this way, Neil. A lot of people picked the wrong week to put on their mood rings. Okay, but I agree with Kimberly. Honestly, both of them are real, and yeah, there was a lot of trading, high-frequency trading. Although, we say the machines don't have a heart and soul, they are programmed by people who do. And essentially what we're seeing now is markets move at super speed, the speed of light, based on the fears that mankind would have normally done themselves. So hence the whipsaw. But ultimately, look underneath the surface of the market at the fundamentals. Today we had 3 earnings out. General Motors had an amazing number. In fact, the best margins in company's history. Tapestry, also known as Coach, had an amazing number, pointing to a consumer that is spending money in Micron technology. A strong session, one of the best sessions it's had in a long time, pointing to continued strength in technology. So I'm looking at the factual stuff to go along with the emotional stuff.
Alan, how about you?
Today's strong surge is a start of stability. I'm paying attention to 3 things that happened in the last couple of days. Number 1, yesterday we had a key reversal in bonds. The bond market was the catalyst for the downward slide last week, but bonds bottomed out and actually bounced. So that's a healthy sign. And then overnight we saw the S&P futures take out their Monday lows and then come surging back. So that's a very positive sign to take out that bottom and then bounce back. And lastly today, the key reversal in the VIX. New highs in the VIX and a lower close. So I think some of the worst may be behind us. We've got to build on this, but this could be a very good beginning.
All right, he's referring, of course, to this fear index, which was all over the map the last couple of days, kind of stabilized by day's end, Kimberly. But, the one thing that these last few days have shown us is the kind of tenors people are on regarding these markets and going forward. What could move them now, obviously, where all you need is a push of a button to get wild swings, sometimes within seconds? What do you think?
Well, I think folks could get nervous about that. I mean, there's going to be volatility going forward. We can't have any kind of movement forward if we don't pull back a little bit, Neil. We've got, had 8 years of consistent growth in the market. That's only happened twice since World War II. So if we're pulling back 5% or 10%, that's kind of healthy for us to move forward. And I suspect we'll have a couple more of these this year.
Charles says we're speaking here, we're getting earnings out of Disney right now, so we're back to following some of that fundamental stuff, out with much better than expected numbers, and after hours trading Disney stock is up. Do you expect we kind of revert back to the kind of things we were focusing on, 3 or 4 days ago?
I do, Neil. That's the ultimate decider where markets go. We've seen an amazing earnings season, 50% of the names in, 80% beat on sales, 75% have beat on earnings, and more importantly, the guidance has been pretty good. And then you go a step further, look at the orders for commercial trucks, look at the order for Caterpillar equipment. We are rebuilding this country in a way that we haven't done in a long time. We've gone from survival mode to growth mode, and I think the markets will reflect that.
And I'll raise this with you, Alan. Michael Block of Rhino Trading was quoted saying, the data is good, the psychology is poor. In other words, even here we can say the data is good, the earnings are good, the fundamentals are good, the economic string of events we've got good. But this psychology, it's a little better than when he made that statement this morning, but it doesn't mean that we're over this sort of antsy psychology, right?
Well, my father's a psychologist, so I am licensed to talk about this subject. It's very important to have the right frame of mind. And we saw a 6-day sell-off straight down from all-time highs, but that just needed to be done. And with electronic trading, you talked about the program trading, the fall will occur at a much faster rate. The profit-taking plunge is really what it was, will happen at a much faster rate as opposed to over a period of weeks that it used to happen before these electronic markets. So volatility is opportunity, and moves will happen fast. You've got to stick to your plan, but discipline remains the key. I'm still remain very, very positive. You talked about the earnings growth. Earnings growth is 13% for this quarter. Corporations are doing extremely well. I've been saying that for weeks, months, years, and it hasn't changed, and it's not going to change anytime soon.
All right, guys, I want to thank you very, very much. Just to sort of button up some of these items here. Of the 30 Dow stocks, 26 were up today. We had Travelers, Coca-Cola, Merck, ExxonMobil among the decliners. So, again, oil still giving back. And of the 11 sectors we watch, including banking, including retail, you name it, 7 of the 11 were up, 2 were barely changed, 2 others, including financials, down. But by and large, that is not too bad. We're going to take a look at this and how this sort of falls out politically here. Remember that press conference interrupted by the launch of this rocket and some other distractions. Whether that's a good or bad thing for the president, well, that's anyone's guess. Stick around. You have more of your world. If you're going to want to own it on the way up, you have to own it on the way down. The Hill's editor-in-chief, Bob Cusack, on how that could play. Obviously, if I'm at the White House, Bob, I'm encouraged by what happened today and more prone to talk about that than I am the last 3 trading days. Or maybe the lesson here is focus on other news that has to do with finance, like the economy and jobs and maybe those tax cuts. What do you think?
I definitely think that you're going to get the blame or the credit on the stock market and the economy, for that matter. And I think it's good for the president to talk up the economy. That's what presidents have to do. But maybe going to that well a little less often, certainly State of the Union, making the case on the election campaign trail. But Trump has gone there a lot, and that's what got the White House a bit jittery this week. And remember, a lot of these gains in 2017 were because the expectation that tax reform was going to pass, and it did pass. And now the question is, okay, now that we're seeing it in paychecks, what does that do to the market? Yeah,
there are a lot of technicians who go way beyond all those fundamentals, Bob, and I'm a pretty boring guy, and when they're boring me explaining this, I know that, wow, we are on boring steroids here. But the gist of it is that you hit certain levels or an inflection point where rates back up to the point where a 10-year note, for example, a widely and very much used instrument to get everything from homes to cars, had gotten to the point that it was the highest it had been in 4 years. Mm-hmm. And they still fear interest rates are going to go still higher for all the right reasons, an improving economy, wage growth, and the good news is actually going to work against the market. Again, I don't expect you to be a market soothsayer here, right, but if they're right about that, that could be a problem, ironically, for the president. Good news gets to be bad news now. Yes, and it does get complicated, especially with the inflation, the interest rates, and you're right. Those experts who know a lot more about the market than I do, they definitely are saying this may not be a rosy scenario. And remember, this is when Republicans, they've had a good run. They've had a bit of a spring in their step at their Republican retreat. They passed the tax cut law, and the polls have started to change in their direction, not dramatically, but certainly Democrats are a little nervous now. So I think where we go from here is going to play a big role in whether Democrats can take back the House or the Senate. I've heard a lot of former administration officials from the Clinton years, back to the Reagan years, the Bush Senior and Bush Junior years, say that if the market is going your way, that should be self-explanatory. What you've got to pound is the improvement in jobs, as this president has, the improvement in GDP, as this president has, the kind of things that people will relate to, and it's icing on the cake if the markets are going your way as well. What do you make of that? I totally agree with that. Think of what Trump's slogan was, Make America Great Again. Now, yes, it was Make America Safe Again to some degree. Right. But when he said that, he was talking about the economy, and there was so much unrest. If you listen to Bernie Sanders and Hillary Clinton on the campaign trail criticizing the economy, you would think that there was a Republican in the White House as opposed to Barack Obama. Yeah. Speaking of that, one thing that I just floored me really with the criticism that a lot of Democrats have given the president about the run-up in the markets, and that it was, fell on deaf ears because so many people weren't involved in the markets. Then all of a sudden they started turning south, and a lot of them were saying, "Oh my God, look what this is doing to the average person out there." I found that a little weird. A little hypocritical, but I do think that, generally speaking, Republicans do feel confident that going forward they're able to get a lot done at the end of last year, and they're feeling the wind shift a little bit, but we got a long way to go. We do have a long way to go, and again, we don't want to interpret or overinterpret either the last couple of days or what happened today. But again, most investors are generally inclined to like it when stocks go up, not so when they go down. We'll see, my friend. Thank you very, very much. All right,
you.
I told you yesterday when we were talking about the market in the middle of a free fall here, they like to see encouraging developments when either companies buy back their stock or let's say a billionaire says, I'm buying some stock. Well, we didn't hear much about companies. We did hear about a billionaire doing that, Mark Cuban.
Stand by for terminal count.
All right, you saw this once. It really was impressive. This is the biggest rocket the world has ever seen since the Saturn V. That was the booster rocket, of course, for Apollo. That was 50 years ago from the same launch pad. A lot of those Apollos lifted off from, of course, this was the big Elon Musk undertaking, where everything went according to plan. We're awaiting a presser from Musk. The launch and the landing, these boosters that successfully landed on a ship position not too far offshore there. Really an amazing undertaking here. So we'll be hearing from him. He's been needed as sort of a boost in this regard. He's had a number of troubles with his Tesla vehicles and underproduction problems and all the rest. Not so much when it comes to rockets right now. But we'll monitor that. Also monitoring the rocket booster called the Dow for a change. And there is a bullish and a bearish argument on this big advance and what's behind it, whether you trust this or you don't. First the bull, then the bear. Are you nervous after today?
No, I'm not really nervous. I think it was necessary. I still think there's uncertainty about what the market does next. But, when you have a run-up like we've had since the election, markets don't go in a straight line forever. And so something had to happen. It was just a question of what and when and how much. The market could go down a lot more. I don't know. But over the long haul, I think we'll be okay.
If this is truly going to be a bear market, there's a long way to go, Neil.
How much longer?
Well, when we spoke last time, I told you I thought that we were facing a bear market at least as bad as the 07 to 09 bear market. So that was over 50%.
That's right.
And I still think that's going to happen.
All right, so Peter Eliade is there, the famed market contrarian, who says that don't pay attention to what happens in a day. The trend is not going to be your friend. Mark Cuban says quite the opposite. The trend is going to be your friend. He put money on it, Mark Cuban, by investing in a ETF that mirrors the performance of the S&P 500. So who's right longer term in all of this? Let's go to Dennis Gartman, investor extraordinaire. Dennis, what do you think?
Well, thank you, Neil. Thanks for having me on. I listened to Peter Eliade this afternoon, and I have to say that I tend to agree with him. Market tops or peaks of some consequence are made in volatility. Market bottoms are usually made in quiet, lonesome, boring type of affairs. And the volatility that we've had in the past several days, I think, is indicative of a market that's making a peak. The public is terribly involved. The amount of money that flowed into the ETF market from the public in December and January was historically almost unprecedented. And it's that type of activity that bothers me some. Yes, the economy's strong, I understand that, but what happens at the end of bull markets when stocks peak is that money moves out of the capital market and moves into plant and equipment and labor, and that's exactly what we're seeing. The monetary authorities have stopped supplying reserves to the system. They had begun doing so back in 07, 08, and 09 when it was needed. Now it's not. And capital is moving away from the capital markets and moving to strengthening economic activity. I think this is indicative of a peak, not a market that I'd want to be an aggressive buyer of. No question about that.
Interesting. It's still too early to tell, but gosh, that I didn't discover that in the 1929 crash and the week of the 87 crash, there were periods punctuated by an uptick in activity and then back to the downdraft, as there was after 9/11 when the markets finally opened almost a week later. So we can expect that, but you always hear from certainly the administration today and others, fundamentals are sound. Now, of course, I remember that too from Republican and Democratic administrations. In every hit the markets had, fundamentals are sound. Our economy is sound. Yeah. Earnings certainly, if you want to add them in the latest batch, 8 out of 10 of the S&P 500 stocks reporting better than expected news, et cetera, et cetera. And that is the saving grace. You're not buying it. Why not?
Well, in the past, you go back to 1973, the economy was doing very well. Things were going along swimmingly until we had an oil embargo, but things were doing very well. Read newspapers from August, September, October of 1973, just before the stock market began a 2.5-year bear market. you would have thought that the economy was doing very well, and indeed it was. You go back
I remember
to the recessions
Barron's laying out the foundation. I don't know why I'm criticizing a fellow publication in our empire here, but saying that the sun looked bright, for investments early that year in 1973. But go ahead.
Sure, and it looked good in 1980 and 1981 before those two recessions hit. The stock markets make their peak during periods of time when euphoria is abundant, and I think that's my major concern at this point. The public is involved. The price to earnings multiples are extremely high. Price to book values are extremely high. So even now
you say that the multiples are high. They haven't got beaten down enough to make the markets look a tad more affordable to you?
Well, they're a tad more affordable, but I'm afraid they might get a good deal more affordable before this is over. Again, Neil, markets make their peaks in volatility and they make their lows in quiet, somnolent, lonely types of trading. This is clearly anything other than quiet, somnolent, lonely trading. This is exuberance. This is volatility, and that, to me, is indicative of a peak. Does that mean we can't go higher? We could, but I have my very serious doubts that we shall.
Well, it worked, Dennis. I'm no longer feeling like supper now, so the diet trick worked like a charm. Thank you very, very much. Dennis Gartman, the Gartman editor. Very, very, very bright guy on all of this. I want to bounce that off of Tom Farley. The name should ring a bell. He is the president of the New York Stock Exchange. We're very happy to have him. Tom, welcome to you.
Good afternoon, Neil. It's a lot better afternoon, up 500 points on the Dow than down 1,000 yesterday.
It does make a big psychological difference. I was talking to a bear and other bears who say the problem isn't so much the fundamentals, their sound, or what the exchanges are doing, their sound. It has to do with the fact that we have more exotic products than we do underlying stocks, more ETFs and mutual funds and special flavors that, you could trade off volatility than underlying stocks. And that is a prescription for trouble. What do you say?
You referenced a lot in that question.
I did.
Talked about, you started with the fundamentals. The last overnight that I can remember that was so volatile was the election night. And I think we all need to take a deep breath and realize the Dow is up 40% since that night. GDP's up 1%, unemployment's down 1%, everything's going well. And despite this volatility, we're going to be okay. With respect to the types of products we have in this market, of course, we have the underlying securities like the great companies listed here on the New York Stock Exchange. We have those core ETFs. For example, ETFs on broad-based indices that have allowed retail investors to have a sophisticated risk management tool. And then we have the inverse and leveraged instruments on more complicated indices like the VIX. And already there's going to be a debate about the suitability of those products, the disclosures of those products, given the events of the last couple of days. And, we'll be a participant in that.
All right. Do you worry, though, that as some say that we've gotten too clever for words here, that all of a sudden, given all of these different options for stock that now eclipse the number of shares of stock that we have, that something is wrong with that picture?
Neil, I feel pretty good about the market here. I don't want to be Pollyannish because I'm aware we've had extraordinary volatility, but the markets have actually functioned quite well over the last couple of days. We've had this extraordinary period of slowly increasing prices. We had to have a pullback at some time. We had to have a period of volatility. And the fact that it's happened in such an orderly fashion should actually give us all confidence. I have empathy for your viewers that have a position that lost money in the last couple of days. That's not to be minimized, but by and large, the markets are working.
How much is written and said about mood and psychology, and it can easily get whipsawed. You're down for a few days, you have a big hit, people get burnt, they get nervous. You're up a lot, they forget what they were nervous about. Do you ever worry about these extremes that a lot of people pounced on today? We're back. But they forget what happened yesterday. What's real?
I do. Yeah, I do. The psychological aspect of investing and trading is real. And in fact, one of the reasons I'm coming on with you is there's been a good deal of anxiety, maybe even a borderline hysteria over the last couple of days. And the last thing I want to see is see people make decisions about their portfolio, about their retirement savings because of panic. Again, the markets are behaving appropriately, and decisions to buy or sell to the portfolio should, in most cases, be made with a many years horizon, not a many days horizon.
Real quickly, the president has been criticized in the past for riding this market up and quoting it. How do you feel about that? Whether he should on the upside, should not on the downside, should on both sides, what?
I mean, I've worked quite a bit with the administration. In fact, I had a call with the SEC just before I came on, and I have a call with Treasury when I get off. So I appreciate that they're watching the markets and they're asking the right questions. But the conversations I've had with the administration have been more about the economy than they have the individual number of the Dow or the S&P. And I think we all take comfort in the fact that the economy is headed the right direction.
All right.
Global asset prices are still very close to all-time highs, Neil. Wages, we saw the growth on Friday. So, again, I feel pretty good about the underlying economy.
Tom Farley, thank you very, very much. The New York Stock Exchange Group president joining us. Well, at the big board. Well, the president talked up a shutdown today, and the market immediately wanted to take a peek at how the Dow was reacting to that. You know what? Crickets. Nothing. The shutdown threat happened. Stocks moved up. And up and up, and as you know, finished the day more than 500 points up. Fox News Channel's Mike Emanuel on that threat, how likely that is. What do you think, Mike?
Well, good afternoon, Neil. The House is due to vote later this afternoon on a 6-week government funding extension, so it sounds like they're making plans to keep the government up and running. It would also include more money for the military through the end of the fiscal year, which is popular with defense hawks and conservatives.
Remember what Schumer said during his last Schumer shutdown? He said he did not want to hold the military hostage. This gives our ability to fund the military completely while we figure out the rest of the agreement for everything else.
That's a reference to Senate Democratic leader Chuck Schumer, who has warned this House plan is dead on arrival in the Senate. Schumer wants more money for domestic spending as well. Sources say the big four leaders here on Capitol Hill, McConnell, Schumer, Ryan, and Pelosi, are close to an agreement to boost both domestic and military spending levels for the next 2 years.
I think we're on the way to getting an agreement, and on the way to getting an agreement very soon.
And then a few minutes later, the Senate Democratic leader came out and said his side is upbeat, too.
I'm very hopeful, very hopeful. Nothing's done yet. There are some outstanding issues. I know you're going to ask me which they are, and I'm not going to tell you, so don't waste your questions. But I am very hopeful that we can come to an agreement very soon.
The thinking is the 6-week government funding extension goes over to the Senate after the House votes later today. Then the Senate could potentially in this government funding package for the next 2 years, and then the appropriators could fill in the blanks after that. Neil.
All right, Mike, thank you very, very much. There was a little bit of news today, indications that Uncle Sam might have to borrow $1 trillion, you heard me, $1 trillion with a T, for a likely deficit we're facing this year. Former South Carolina Republican Senator Jim DeMint doesn't much like it when it happens under Republicans or Democrats. But the debt and the cost of carrying that debt, especially as interest rates begin to rise, well, it's not going to get any better. Senator, very good to have you. Thank you.
Neil, it's good to be back with you.
What do you make of this? $1 trillion. I mean, it is what it is, and it would, you know, special circumstances, all of that. But man, we're digging a deeper hole.
Well, Neil, I was a businessman who ran for Congress because I was concerned about our debt 20 years ago, and it was less than $5 trillion. Now we're busting through $20 trillion. We're on an unsustainable course. Almost everybody in Washington knows that. The fact that we can't address it, the fact that the Democrats won't allow us to fund the military unless they get more for domestic spending, it's just very concerning as a citizen looking in from the outside. But I think Trump is playing this right, Neil. He's putting his cards on the table. If the Democrats want to hold the military and our government hostage to get their amnesty program across the line, then let them do it. I think they'll suffer for that, and he'll probably make them pay for it.
Well, you know what I think is going to happen, and if I'm wrong on this, I'll burn this tape or digital thing, whatever it is. I think both sides are going to get what they want. There's already talk in the Senate. They have a master plan to get a 2-year budget going. I don't know how believable that is, but it would allow, you know, Republicans to see more money for defense, Democrats more money for non-defense programs, and no one will give a tinker's cuss about the debt that will be piling up.
Neil, that's what happens every year. So
it's going to happen again.
You don't get $20 trillion in debt without a lot of bipartisan
cooperation. I thought when Republicans took over, they would stop that nonsense. What happened?
Well, I'd hope so, but now they control all the branches, and we're looking at $1 trillion of debt. And that's not because we're taxed too low in America. It's because we spend too much. There are billions and billions of dollars of duplication and waste in our government. A number of people have pointed those out over many years, but we're not even addressing one of those. And that just tells me, and I think every American, that they're not serious about spending, and eventually that is going to hurt a lot of people.
No, I think you're right, Senator. Thank you very much. A crazy news day here. Always good seeing you, my friend.
Good to see you, Neil.
All right, you guys probably know there's something called a volatility index, a fear index, but did you know there's something called a velocity shares daily inventory short-term exchange index and a pro shares VIX short-term futures ETF index, which is meant to counter the effect of buying against a fear index that is getting too fearful? In other words, you can trade on fear, and there are instruments to do this. That's the problem, my friends. These exotic trading instruments now vastly outnumber the stocks you normally would trade. Whatever happened to buying and selling based on, well, the underlying product? You cannot escape market volatility. The problem is there are some bunion heads who think we can, and it's costing you money. I'll explain.